Namaste everybody, myself Ashish bring another video for today with the mid-cap monopoly stock with the Sunday special video. So let's begin. Before the investing in the monopoly stock in India can provide it a stable return. Still, investor should consider all the relevant factors before making any investment decisions. Here are some essential factors investors should consider before the investing in the monopoly stock in India. The number one is the company performance. They evaluate the company financial health, the market share, and the profitability over time. Check for consistent revenue, profit growth, debt level, and the cash flow. Number second is the competitive landscape. Analyze the company's position in the market and the level of the competitions. Look for the potential threat to the company positions such as a new entrant and the disruptive technology. Number three is the industry's outlook. Research the industry the company operate in the market outlook, understand potential changes that could affect the company's positions. Number four is the valuations. Access the company's valuations, determine if it is the reasonably priced. Check the price to earning ratio, the PE ratio, and price to book ratio, the PB ratio, and other relevant valuation metrics. Number five is very important is the management quality. Evaluate the management team's experience and a track record. Look the transparency, ethical behavior, and the good corporate governance and practices. Number six is the risk. Identify and evaluate the potential risk that could affect the company's positions, such as a regulatory interventions, changes in profile is the number seven, and the consider your investment goal, risk tolerance, and investment horizon before the investing in the monopoly stock. Determine if the company aligns with your investment philosophy and the risk profile. Number eight is the dividend yield. Check the company's dividend yield to access its dividend paying ability. Look for a stable dividend payout and the reasonable dividend payout ratio. Number nine is the corporate governance. Evaluate the company's corporate governance practices to ensure that the management team is acting in the best interest of the shareholder. Look for an independent board of directors with an experiences in the industries. Number 10 is the macroeconomic environment. Evaluate the overall economic environment to understand the potential impact of the company's operations. Look for the microeconomic conditions. Apart from this, indicators such as inflation, interest rate, GDP growth, and that could affect the company's revenue and the profitability. Start with the performance overview of the mid-cap monopoly stock. So mid-cap monopoly stocks, meaning they have a market capitalizations in between 5,000 crore to 20,000 crore. These companies have a dominant positions in their respective industries, and their stock have a potential to provide the higher returns than the large cap stock. Here is the performance overview for the 5 mid-cap top monopoly stock in India. So let's start with that. Number one is the Borosil Renewable. The Borosil Renewable is the leading solar glass manufacturer in India with the dominant market positions in the industry. The company's product find application the PV and the concentrated solar power sector. The Borosil Renewable is expected to benefit from the government, the push towards the renewable energy sources, and the increasing demand of the is the computer age management service. CAMS is the leading financial and mutual fund service provider in India. With the dominant market positions in India, the company's services include the mutual fund transfer agencies, transaction organizations interface, electronic payment system. CAMS is expected to benefit from the digitization of the financial services. Number three is the Container Corporations of India. Container Corporations of India, Concor, is the public sector company that provides the multi-modal logistics service it dominate the market positions in the container logistic industries and is expected to benefit from the growth in the company's logistic and the transportation industry. Number 4 is the Bharat Heavy Electrical Limited. Bharat Heavy Electrical Limited BHEL is the public sector engineering and manufacturing company specializations in the power plant equipment and services. This company has a dominant market positions and power equipment manufacturing industry and is expected to benefit from the government and focus on the development and power sector. Number 5 is the Relaxo Footwears. Relaxo Footwear Limited is leading Indian manufacturer with the strong presence in the domestic and international market. The company has offered the wide range of the footwear product under the popular brands such as Relaxo, Flight, Sparks and Bahamas. With a focus on the innovations, customer satisfactions, Relaxo has become a trusted brand among the customer in India. Relaxo has also ventured with the e-commerce segments with online stores, making its product accessible to the customer nationwide. With this, I am Ashish closing out with the today's sessions. More such video, please do subscribe our channel. Also, video is purely made for the educational purpose. There is no recommendations for the stock buying or selling. Do your own research. Please consult your financial advisor before investing. So next week we'll be see you with that large cap portfolio. Till then, thank you very much.